Alright guys, buckle up. You heard that right. Nike. The swoosh itself has been taking a beating lately. Stock price tumbling down like a rejected slam dunk. But hold on, is this cause for panic selling or a prime buying opportunity? Let's dissect this sportswear giant. We will crack open recent performance, see what's on the horizon for the business, and dive deep into why this slump might be just a golden chance to snag some shares of Nike at a steal. Fundamentals, valuation, and everything in between. We are leaving no lace untied in this Nike stock analysis. So hit that subscribe button, smash that notification bell, and let's get this money. First, Nike performance. Year to date, the stock is down 31.7%. If you look in the last 5 years, the stock is down 60%. This is a pretty bad performance, especially for a company with the quality of Nike. If you look at the all-time graph, of course it's good, but they have been going nowhere since 2018. This is like 6 years with no gains. So historically, or looking at the last 5-6 years, the stock is going nowhere. This is the type of stocks I like to start digging into it, especially when it's a company like Nike. So why the stock is down? These shares have plunged, having a bad performance, but last earnings report the stock fell like 10 or 15%. They warned about China weakness. Their sales on China has been down. They ended this fiscal 2024 last quarter, and their revenues was basically flat. They had no growth, and they are expecting to have low revenues next year in 2025. So it's gonna be down around 3 and 4%. So it's difficult, especially for a company. This is a world leader on sportswear, but they usually go high single digit, and right now they are showing no growth in the last 2-3 years, but you saw next. But basically their earnings were a bit 1.01, but when the analyst expected 0.83 cents, but revenue was under expectation. So that was a really bad quarter for Nike. But let's look and dive into the fundamentals of the company. This is a company that is worth around $110 billion. It's trading at a P of 19.5, forward P of 20.4. This is low, especially for a company like Nike. So this seems really an undervalued stock at first glance, at least. When you look at the S&P 500 right now, the S&P 500 is trading at a P around 24, a forward P around 20, which is historically high, but this company is trading under what the S&P 500 is trading right now. And I would say Nike is a high quality company above the mean of the S&P 500. So looking at the PE only, this company looks really cheap when you compare to the market. They've been growing revenues around 5-6% per year. Their margins are really good for a sportswear company or consumer discretionary. I would say gross margins around 45%, net margins and free cash flow margins around 10-11%. This is really good. That's one reason Nike have a pretty wide moat. Their cash on hand, their balance sheet, they have $11.5 billion and a long-term debt of 7.9. They have net positive cash on their hand. They could pay their debt only with their cash in hand. You don't see this very often in this type of companies that have to manufacturing goods and everything else. So this is a pretty good balance sheet in my opinion. Their returns on equity and on invested capital has been really good. Return on invested capital around 23%, 5-year median return on invested capital around 20%. This is pretty high. They have been returning cash to the shareholders, which is incredible. A dividend right now it's around 2%. That's not high, but it's high compared to the last year for a company like Nike. Payout under 50%, really great. Performance this month has been down 23% and year to date minus 23%. When I look into the money journey checklist, it's all check marks like we like it. A company that is still growing. Look at the revenues. They are still climbing. 2023. The trend is going up, even though last years has been flat, and they are expecting to have a drop on their revenues this year. But besides that, they have problems that are not being solved right now, and it's gonna take a while. But after that, this is a wide mode company, a really high quality company, and I'm expecting them to recover. And right now, investors are afraid of that. Um, Really good margins for a company like that. It's not a technological company who has net margins above 30%, but they have wider moat. There are a lot of barriers to enter this business. Even though investors are talking, they are losing market share, but they are still the world leader. Nike is Nike. We have Adidas, we have other brands like Lululemon, other companies that are starting to enter the business, gaining some market share, but Nike is still the world's lead. Their market share around 40%, so it's pretty high, and there are a lot of value on Nike's brand. Return low debt. They basically could pay all their long-term debt with their cash on hand, and having free cash flow positive. Their returns are really great. They have a wide moat. I will not talk about the moat because everyone loves Nike. If you ask anyone in the world what is the best shoe brand or the best apparel brand, I would say probably most of the citizens of the world would say Nike, probably. Free cash flow positive, returning capital, doing dividends and buybacks, a very mature company. They have a fundamental score really high, one of the best companies, and one of the companies I have on my watch list. And now I'm starting getting interested because always Nike always traded at a high PE, and it's difficult to make money in a company like that. But right now it might get interesting. But to do that, we have to look into the discounted cash flow, some metrics, gross margin stable above 43%, returns on investment are been decreasing, but I'm expect them to recover in the future. Shares outstanding has been trending down, which is really good and something we like to see. And right now, I'm seeing Nike increasing their share buybacks in the 2023 and 2024, so they are buying back more shares at a cheaper valuation, which I love. So, for the discounted cash flow analysis, my base case, since this is a US company, I would say this company has a wide moat. This is a pretty safe investment. So I'm using a discount rate around 10%, and I'm expecting this company to, after this 2025 year that is expecting revenues to go down 4%, I'm expecting 2026 they starting to grow again around 4%. And then for my base case, I'm trying to be conservative here, so 5% growth in the other 3 years, and for the last 10 years only 3% growth. Bear in mind, Nike is a very mature company, so, and already a big company, so don't expect double digits growth. Net margins, they are trying to go more direct to consumer, so their margins probably will expand. But when we look into the history, they already have margins around 12%, almost 13%. So I do believe they can have 12, 13, 14% margins, but I will be conservative on their margins. So I don't know, maybe 12%. I think it's gonna be really good. 12. I'm changing that. So I think their margins should be higher than my previous discounted cash flow. For a PE, I have to pay a premium. I will not put a 16 or 15. For my base case, 21 p. This is a pretty safe investment. There are a lot of value in this brand. So for my bull case, I'm expecting a little bit better results, 6 and 4% growth, 13% margins, higher PE. For my bear case, only them growing at 4%, 2%, 19 PE and 11%. And that I came with an intrinsic value of 68.5. They are trading right now at $72.7. This is a really great company. I do love Nike. It's a company I will love to own. Right now I don't own this company. They are trading pretty cheap. I'm still trying to find out if this is a company that I will add to my portfolio, but right now Nike has not been cheap as it is, but there are some problems in the short term. They are having difficulties to increase market share on China. The consumer on China is not spending money right now. It might gonna take a while, but there are a lot of value on Nike, and my fair value, I would love to buy this company around 68.5. My fair value would be around 68, which is the bottom that Nike have traded in 2020 on the COVID crisis. So this might be a really good price, but if you'll be waiting for the $68, you might not get a chance. And right now it's a pretty good price. When we talk about quality companies, really great business like Nike, sometimes you'll not be able to find a really good price, or you'll not be able to buy Nike at an undervalued price. So it's like buying great companies at the fair price, and right now you might be around that, so around $70. It might be a really great price. So this is what I think of Nike. Some problems in the short terms, but a really great business, high quality companies, and there are a lot of value in this brand. This is a great company that right now it's close to their fair value, I would say. So this might be a really great investment, but always do your due diligence and don't buy just because I think it's a really great company. I don't own it, but it might be a really good add to my portfolio, and I will be looking forward to what happens in Nike stock and in their next earnings report. So this is my opinion on Nike, guys. I hope you liked this video, and if you like it, please like and subscribe. See you next time.